And how many startups looking for funding? Okay, a few more. And how many banks looking for partnerships with startups? No. How many banks scared that startups are getting into your space? Okay. So I'm gonna hand it over. My first question, I guess, as we're talking about startups attracting VC funding, and I guess I'll pass it down to you first, and then further to Stas, about what, for you as a VC, do you want to see from a startup when it comes to making it a fundable or interesting opportunity?
Sure. Thanks. Good evening, everybody, for being here. For us, the most important thing for fintech relevance is that it's a very crowded space, and most of the startups that we see here are looking probably doing many of the same and the same of the many. We would rather like to see people who are trying to really disrupt. Maybe a fundamental premise is not whether you will succeed or fail, but if you succeed, how big you can become, how disruptive the things can become. And we try to see what's the motive behind you being in a startup. Why are you here? Is it that because it's cool to be fintech, it's cool to work with, say, Barclays and ABN AMROs, or is it that you really want to disrupt this space, and then how you want to go about it? So that's some of the key things that we essentially look at and see what's the basic landmarks from there.
Well, fintech is, I think it's complicated, hard space for both startups and for the investors. It's very crowded on one hand. On the other hand, it's regulated. The cost of, if you go direct to consumer, then the cost of acquisition is just sky high. If you're selling to banks, then the sales cycle is like 2 years, right? So it's hard to create like true technological innovation there, because basically you're just moving money around, right? So it's really hard space in a sense. But on the other hand, if you think that only in Europe there's 5,000 traditional banks, so it's a huge space. And it's not the market where winner takes it all. So you can create a big company without being the single player dominating the whole region or something. Yeah, and I totally agree. When you see those pitch decks, it's like, okay, I've seen that already 20 times. Like, okay, what's the difference here? Besides the team slide, right? So what we are looking for is something kind of unique in some innovation, how they combine existing infrastructure, existing models with some secret source of AI machine learning or something that will enable them really move quickly and grow to. In fintech, you need to grow to significant size quickly, otherwise you're just gonna die. But if you already grow to significant size, then it's all about unit economics, and as I said, it's not the market where the winner takes all.
Yeah, as an angel, what do you look for as well, for example, in fintechs?
In fintechs, yeah, fintech for an angel is not that easy, because as you mentioned, that is not one common market. As an angel, we're focusing more on the teams than VCs do, but we also need the understanding of the business model. And within fintech, they are very different. Their approaches to the common banking system, like services, some, what we just saw, try to disrupt the market, which is very hard because they're regulated. That's more interesting if you're looking in not so well developed countries, like aiming for Africa. There's no banking system, there are not that much regulations. This is interesting, but this is far too big for an angel. What we didn't mention yet is there are a lot of B2B opportunities, leaving the banking system out of the game totally. This is a case that is really interesting also for angels. We're working more with industries, and to have shortcuts to work together and to make payments and to make services directly between the industry partners. That's for us really an interesting thing.
And Rafi, I know you're passionate about sustainability and triads when it comes to business models, so maybe you can comment on how you apply that to fintech.
Yeah, first of all, I want to say that fintech is tech, it's just tech. Okay? It's just a technology. It's a solution perhaps in the search of a problem. The most important thing is, what is the problem that you're addressing? And how much have you fallen in love with the problem, not the solution? Okay, that's the first thing. And how big is this problem that you're addressing? For me, I also look at the sustainability, because we're moving in an area that is not just about profits, it's about people and planet as well. And what are the things that you're doing? And in this area, technology is just in its infancy, let's say, in terms of addressing, vetting, and curating opportunities in the areas of responsible investments and sustainable finance.
That makes sense. And when you guys talk about disruption, because we're talking about disrupting the fintech market, a lot of the time it's faster, cheaper, better. But, you know, like, faster, cheaper, better makes sense, but when you're talking about disruption and differentiation, like, what are the elements you're really looking for? You mentioned team, for example, is something that you see in different slides, but otherwise they all start looking the same. So maybe you can elaborate a bit of what distinctions or examples of companies that you particularly like that you felt stood out for the startups here to kind of understand how to think about their business. Or we can pass it here.
Maybe one Israeli company that we have invested in, I think it was like love in first sight. So they basically are using static and dynamic cognitive learning to do away with the whole user ID, password, OTP. That's a huge disruption. And if you see, estimates say about 39 billion is spent just in maintaining these, and still there is about 19 to 20 billion of phishing still happens because of this. Now look at it, today the way the banking industry works, once I log in and then I pass my machine to Eric, he just has to make sure that it doesn't, the session doesn't log out. He can do practically everything pretending to be me. But what BioCatch is giving, it's based on the quattro keypad, how you type the pressures, which is a unique pattern like your fingerprint, like your iris eyeball. The moment I give mine login to Eric, the system will log out. That's like a unique way. And that's just a huge long hill. It's really disrupting whosoever, wherever in this industry. I think those kind of outlier models really work very well. So therefore, again, going back to why you are there, that's a very important motive for the team. And what is that you are trying to do? It may take you a longer time than others, but this may not be the fast, do it fast and do it quick and things like that. But it has to be something which is really sustainable in true sense of the term. Because today's time we have to do things which is sustainable. If it is not sustainable, it won't work. If it is sustainable, profits, returns, IRRs will flow. No doubt.
Okay, maybe a follow-up. As an angel, I really did somehow fintech investment. It's an AI company that gets personal data in a safe place and connects your data with your bank, with your insurance. And it makes safe that the insurance and banks only have access if you allow this. And why is this interesting? First sight, it didn't sound that interesting, but it really is. And it's about sustainability. It's not a quick shot. It's not a big, maybe it's a big shot. All your banks need your actual personal data. This is regulated. Today, if you move and you forget to tell your bank or your insurance, they have to search for this. The average amount of cost for this is between 10 to 15 euros for each case. Now this company built a software which allows to share the actual data of each customer in real time, and this on a safe way for about 2 euros. per transaction, which is a huge save, and it has risen a large interest of the traditional banks. But it's slow growing, but it's a sustainable model. That's why I invested in this as an angel. And these are the kind of models that are interesting. It's a solution for a problem that is existing. It shows a large opportunity, and it's not just a moonshot within the classical VC model, just filling up fast growth, win or lose. So it's more really about looking for something that makes sense, which is maybe not the obvious thing, not trying to be disruptive in the market, to be the new bank, but to offer services with a better quality, lower price, being faster. And this gives new business models that are not there up to now. So this
I love what you guys just mentioned, because that's an example of, rather than a solution looking for a problem, somebody who probably struggled with those problems and said, hey, this is ridiculous, or how big is this, am I the only one? And solving that pain first, and then picking technologies to solve that, rather than saying, hey, I built this tech and I'm going to now find somebody who needs it. Yeah. So, I mean, Rafi, I know you mentioned as well, like when it comes to sustainability, profits, people, as well as planet. You know, one of the things when it comes to that, the mindset of, hey, there's a problem here, let's solve that. Do you see that mindset? I know it's tech, not necessarily fintech, but do you see that mindset in any company that you would want to give as an example as well, just as a way to kind of inspire the startups here?
Yeah, I think the understanding of fintech today is about that. It's all about banking. It's all about finance. It's all about using cards. It's all about the experience. It's all about that. I think fintech is beyond that. I think there's a lot of opportunities involved here that is not being addressed. I sometimes see when I look at the presentations before, there's wonderful products, wonderful companies, and so on. It feels like one of the beaches in Malaga, where there's thousands of people swimming in a very short period, sort of shores, and then the whole ocean or the sea is completely empty behind them, right? So everybody's like playing and swimming in this one area, and they're all looking for this. But I think there's beyond that. There's a lot of things beyond that that's happening. I'm using a metaphor to explain this. What I mean by this, I think fintech and sustainability, and the triple bottom line we call it, right? Profit, people, and planet. I think there's opportunities in this area that we're solving a lot of problems in the future that needs to be addressed by technologies that's going to help us identify these problems as well as provide financial solutions. I look at it from a portfolio point of view. As an investor, I'm looking, how do I manage a sustainable portfolio, right? And then I'm looking at those three things, because when you look at sustainable companies, or companies who are focusing on sustainability, they're looking much more long-term, they're identifying the risks much more sanely, let's say, and it's much more diversified. And also they're people-oriented. So, which means that technology and people are one of the same. A lot of people mistake this. They think technology is something out there that actually happens, but it's actually people who make technology. And it's people who are using technology. Technology by itself is just technology, right? So it's people and technology are one of the same, especially in the early stage startups. When you get to the VC level, the traditional VCs, which is sort of the dying, that changes a little bit. And maybe we can talk about that later.
All right. And Stanislav, you mentioned also regulation as one of the barriers in fintech for a lot of companies. Have you seen anything that, any company that really looks at the regulation and maybe has gone up against that challenge, or how do you monitor that landscape?
Well, yeah, there's one good example. We all know that AML, or anti-money laundering, is it's a big issue. It's getting bigger and bigger. Banks are under scrutiny and stuff. And the thing is that the systems that exist in traditional banks, how they do monitoring of money laundering, they are used to the situation where previously customers, to make a significant transaction, have to walk in to the bank, fill the paper, and submit it. So basically, they saw the person, handwritten paper. But these days, you do transaction on your phone. You don't know who it is it the same person who owns the account, etc. So banks are absolutely not equipped to deal with it. The system that they have, they don't even have a data point. And that's where I know a couple of companies that actually help them. They're gathering those data points, and they're able to, even before looking into the transaction itself, quite often you can tell already in advance what handset, where it's from, location, agent, is it virtual handset, is it actual handset. There's a lot of things that you can like block the transaction even before it reaches your system.
And that makes a lot of sense. And speaking of not just the regulations, but also we saw earlier that there's a lot of fintechs going into niche verticals that banks previously were in and really trying to differentiate and disrupt those. Do you see eventually getting to a stage as banks are transitioning to being more tech companies? I mean, I've heard, in the US, a lot of Wall Street banks are moving quite actively towards having a technology-first strategy rather than being traditional banks. I think I've heard Europe is a bit behind in that sense, but that's picking up. And as the space matures, do you see still a lot of early stage opportunities in fintech, or are they mostly now kind of more mature stage as investors? Because I mean, you've probably seen a lot of deal flow, so I'm just curious if you're noticing that trend, and is that something that's happening as well, or?
I think there's a lot of opportunities still, but those opportunities are mostly what, like the most exciting ones, is not kind of that much. If you look at the bank and think, okay, what can I do? It's more about space where before banking services, something like the financial service, would not be possible because of UX and data availability. So it's more about what you've been saying, that, for example, I know these days, like if you want to finance your invoicing, like before that we have to submit application to the bank, but these days you have all the data in Cloud ERP, basically you issue invoice to your customer, and booms, you can have the just one button. Do you want to factor this invoice? It's inside ERP. It's not, you wouldn't think about it like banking service. No, it is excluding bank from it, and there's more opportunities like that because the data is there, UX is there, and it's in our pocket.
Yeah, I really liked what you said with the ocean. There's a lot happening at the beach. The things that are obvious, where people think that's banking, there's happening a lot, and I think there the opportunities are rare. But there is still that far ocean. There's so many things within the processes of banking, of insurance, the whole system. And there's so many things that will change and give new chances. So I think there's much more chance left than we see today.
So we are seeing two very different trends, if I may compare America with Asia, say for example. The fundamental thing is that disruption is a process which can only happen from outside. So it's very hard for existing banks, the monoliths, which is today very bureaucratic, manager-run, to disrupt themselves. The American banks, or some of them, they realize that, and they are therefore going out and reaching out to fintech startups. And even we have been seeing models, and this is also relevant in China, where a lot of unicorns are today coming up. These banks not necessarily induct these fintech startups into them, because then they kill their disruption, innovative spirits. They rather keep them outside, they take the play, they get into an investor as well as customer relationship into them by investing in them, but they don't merge them or they don't acquire them. And also in most countries in Asia, say for example in India, in Singapore, there are one or two, even in America, there are one or two banks you will figure out they are way ahead of the rest of the crowd in the banking system in terms of digital adoption, in getting into disruptive fintech space. As a fintech startup, my advice will be you have to find these players in your country and try to work with them, because they can take, so these are like your smart collaborators. They will take you places, they will take you places quickly. They will give you all that they need to make you also happen. So you will get a lot of not only financial resources but mentoring as well. But you have to pick these people and you have to catch their attention. Because every day, remember, if as VCs we see so many deal flows, they have been inundated with fintechs, and there are plenty of them, as the metaphor was swimming in the beach. So you have to really get out of the red ocean into the blue ocean and try to play in there. And in this, please try to make the world as your oyster. It doesn't matter where you belong to. Like, for example, look at Moniz, TransferWise. Moniz, these people all started off in UK because the regulatory framework was most congenial. Because the elephant in the room is the regulator. You have to figure out where that regulator is most beneficial for you. And there are three kinds of regulator, if I may say so. The first regulator who is behind the curve. He is reactive. He is in a wait and watch. Somebody must do it, then I will follow. That's very easy to figure out. Then there is another set of regulator who is really taking the charge, taking the lead. And then there is a third regulator, which is the most of the regulators. They are giving a lot of lip service. They are trying to tell you, look, we are very, very proactive, we are open, come to us, but they actually have nothing in place. So you have to work with those who are really proactive, even they are willing to give you a chance, even though that means a sandbox. Go for it and figure them out where they are. And the world is flat today. Technology has not made the world flat. Go there.
Thank you for using those metaphors. It's very interesting that you like it. What's interesting, I look at it from a different perspective. I look at it like in the sector of banking, it's quite saturated, as I mentioned. What is really interesting, all the peripherals, let's say if you put the banking and financial institution in the center, all the peripheral sort of circles around this that actually deals with financial transactions, that's where I think the opportunities are. What I mean by that is every single time we have a business transaction, there's a financial transaction involved. Okay? I work for a company called NCR. NCR Corporation is a 120-year-old technology company. Can you believe it, 120 years old? And they're the forefront, actually, in fintech, if you call it fintech. Why? Because they have something like 55–60% market share in ATMs, in cash machines. They're the ones who invented the electronic transactions, the RFID, and so on, and the checkout counter, automatic checkouts at grocery stores, and so on. What was interesting is I was with them for about 11 years, and I saw the transition going from the manual work to automation, and at the end, the logo of NCR became transforming transactions into relationships. This was the motto, a hardware company transforming into an intellectual capital intangible company. Even though we sold hardware, our focus was not about selling hardware. Our focus was about selling availability. And this is what really transpires these opportunities. Focusing on just fintech as a tech, or focusing on the banking, it's okay, it's good. I think that area has really been disrupted lately, and I think we talked about this, that there's a lot of human cost. Anything that's repetitive can be automated. We know that. But how much can you automate? Now we're getting to the point where it's actually becoming relationships. It's about the social capital. It's about trust, right? These are all intellectual capital. These are all intangibles. And this is something that I think where the opportunities lie. Looking at the peripherals of financial transactions in business.
And I think one thing that's coming through here from what all of you guys have mentioned is the idea of finding this problem that a customer actually has, rather than necessarily just starting from the tech outwards. And when it comes to that mindset for startup founders, you know, okay, like I have this problem, I need to figure out how to actually solve it. Usually one of the challenges is what is the right tech, what is the right partner, what is the right business model, for example, and what advice would you give to startups who are in that early stage before they come to you guys, or around the time they would, because I'm conscious we have some here that are looking for funding, to get their head right around the model before they actually then go out to raise. What do you want to see, what would you recommend that they do as entrepreneurs? Perhaps we can start with Stanislav.
Well, the model, if it's really early stage, then the model can change. But the problem should be there, right? So that's kind of huge, really painful problem, right? You can change a little bit tech, you can change model, okay, but if the problem is not really that painful, or it's really too small, then it doesn't matter what kind of model you have around that.
Well, I know the angel perspective and I know the fund perspective. I'm working both words. And for the early start, which I know a lot, I can give you one advice. If you're working B2C with customers, go out, reach your family, reach your friends, talk about the thing you want to do. Do they understand it? Do they need it? And you get an idea if this works. It's a bit different if you're B2B. Then you have to find somebody you can talk to out of that special area you want to work in to really get a grip on, is that thing you work on relevant? Never go just, I got some interesting technology, like there's so many coming around. Oh, we have that idea and it's using AI and blockchain. You have to invest in that. I can't hear it anymore. Blockchain and AI, interesting technologies, they can really solve problems. There are good ideas around, but there has to be the case for this. And it's about the case, and it's about a good team. And in early stage, use your network, use your family, your friends, and everything you have. And one other core advice I give you, bootstrap as long as you can. Try to test in small numbers, do little circles, and when you see that thing is really working, it's a good idea, then it's the first time you should address angels, not VCs. That's much too early. Try to find somebody who's in that area you're working in, because at the beginning, it's much more interesting to get somebody with a good network, somebody who has expertise in the field you're working in. It's much more worth than the capital. And after that stage, think about the capital, and if you start thinking about capital, do a long time planning. Don't just go for first investment, then work, and oh, in 2 months the money is running out, I have to go out again and then find new money. That's not the way it works. You have to do planning ahead. When is the first step? You need money. For what do you need the money? How long will it last? Already address the following investors and look who these are. Build up relationships to those investors. I always say it's just like a marriage. You have to walk together for a long time. It's a venture together. You have to cope with the people. It's not only the money. Also look at the persons you're dealing with. You have to go along with those investors. They want to see what's happening with their money. And the money is not just you can do something. You will see it's also a burden. There's somebody behind you who gave you money, so you have to do the right thing with that money. So be careful what are the persons you're working with, and do a long time planning, and who are the right persons, who are the right VCs, who are the right investors. For each stage you will need money. This will change over the time you're working, but you need a plan as a base ground. That's really what you should look for.
Rafi, any thoughts on planning?
What was the question?
The question was advice for founders when it comes to taking a problem and then finding a way to actually bring that to market, whether it's model, whether it's...
Yeah, I think I look at everything from one word, investability. Okay, so investability for me has got the rules of three. The first one is a team. Is the team investable or not? Is the team cohesive? What is the diversity of the team and how well they're getting together, how well they're working together, how dynamic they are, and what sort of solutions they're thinking, how well they're adjusting, or how they think out of the box. The second thing, investability of the project. So we talk about all that stuff in terms of longevity, in terms of the specific, the problem that they're solving, the unique value proposition. I'm a huge business model person, business model innovation. Are they really doing something tried out, or are they doing something quite unique in their business model? And the last one is, I want to keep it short because I can go on talking forever. The last one will be, it's about path to liquidity. How quick, what is the path to liquidity? I don't mind the long term. I just need to understand what are the things involved in this process. Where VCs think differently, angels are in a different sort of world.
Debneel, maybe you can elaborate on those mindsets.
So ours is a rather quite different way to approach. The first thing probably as a startup, what you should look for is that what's that idea? And that could be a problem, but it could also be a delight. Like the example I gave earlier for the cognitive, static and the dynamic security, it's a wonderful idea that has more created a delight. That's why it's such an adoption curve today. American Express, Bank of America, these are investors in this startup. And it's just 3 years since we had invested in them. So essentially, how big is that idea? How sustainable is that idea? And keep another thing in mind. Today is a time where the landscape is changing in fintech. Probably fintech is one of the fastest changing landscape. So anything that has happened until yesterday is probably history. And you have to really catch up with tomorrow more often than not. And therefore look at where the landscape is transitioning. So today we have this internet wonder kids, like the Googles, the Alipays, the Apple Pays. See where they are going. Try to be part with them but not compete with them, because they have humongous powers to disrupt. And if they see you there, they will eat you up if you cannot get in with them. So that's a space probably you should avoid. Rather, the big banks, the monoliths, the brick and mortar financial services industry, that's a very easy space to disrupt. Go and attack them. So that's the kind of models which we will rather like to see the startups following there. And truly looking to start from where you go out and then connect with people who are better than you. So your investors has to be better than you. They may have very good connections, especially in areas where you don't have connection. If they don't have that, then don't take their money. It has to be smart money. Please do not go for any money and do not spend a lot of time in planning, because the time today, the landscape is very, very fast transitioning. You have to really go after something where you have an ideological fit and figure out who can help you with that. That's about it.
And that's, on that note, that's a really good segue to two trends I'd like to talk to you guys about. One is brand. We all talked about this earlier, like banks have this trust reputation, so like yes they are slow, yes they are corporatized, but you know exactly how they work and they'll always work that way, and so reliability comes to mind with the bank names. Fintechs are edgy, they have this, they're fast, they're more convenient, potentially better service, potentially other things, but you still use your bank for like your I want this safe, and the fintech for I just need this done. That's kind of the impression that the space kind of gets. How important is brand to you, and how do you see, do you factor that into your investment decision making when you're looking at a fintech, and what type of things do you like to look for when it comes to brand? Not just brand from a marketing standpoint, but from a business ethos standpoint as well.
Yeah, it depends on. If you're going to consumer markets, brands are still about trust, as you mentioned, as we've seen before. So that's why the big investments and large amounts of money are still with the traditional banks. The newcomers are more about being convenient and fast, but still people don't put really the big numbers on the new players. So brand is, in this case, really important. If you go to working within the system, supporting services, if you go to B2B, the brand is not that important. There, people are looking at you, at your experience, at your network. They try to find out if you're trustable, and they try to find out what's your experience. Are you really of help for them? So in this case, the brand is not the major topic. But whenever the consumers come in, it's still the thing.
Well, in the consumer space, when we make a decision on this, it's quite early stage, so we don't account for the brand as an asset, like being the mode potential, but it can be, but only at really, really big scale, like in transfer rights, right? There are other companies doing the same thing at the same service level, same price, same everything's same, but transfer is brand. So for them, at their scale, it's already translates to customer loyalty, and at their scale, it has kind of value. It has value also for investors.
For us, probably again very different. We are looking for the next breed of consumers. So those consumers are the generation XYZ. They have no brand loyalty, and they shouldn't have. Because if you really, let us look at some of the recent statistics. The biggest brands today are Apple, Google, Facebook, Amazon, and not Unilever, and not the Barclays or the so on and so forth. So the whole thing is that is a startup, what is basically you need to build, and the biggest brands today are those who are spending most on technology, R&D, rather than on advertisements. That's what is coming out from the global researchers. So therefore, when you are a startup, please focus on building a wonderful product. A product that doesn't do the job very well, but also defends the lines of codes that you have written. Security is a very important aspect of it. Do not lose it, and do it right from the beginning. Make it a part of your system. For that, go out and get the right security guys who you can work with. You may not be having the skills in-house, and you shouldn't be having because you are looking to disrupt the fintech space. But if you can build a wonderful product, whether you're B2B, B2C, and you can spend real bottom dollars, do not drop the ball, it will be a wonderful journey, trust me. And you will be a brand before anyone can even realize it.
I just want to add one small thing. I totally agree with this discussion about brand. I think I am a little bit old-fashioned in this respect. I always say that never sell your product, let your product sell itself. So in this case will be, don't sell your UVP, let your unique value proposition sell itself. And I think you'll have a brand.
So brand is derivative of product innovation. And on the point of product innovation, when I think fintech, coming from a public markets background, I think of what JP Morgan's doing in terms of faster trading systems, Goldman Sachs during the crisis, and how they weathered it versus Lehman. And the types of deep tech that it takes to really shave off milliseconds on trading. These types of kind of, serious, hardcore tech solutions, that's kind of what I initially thought fintech was. Of course, there's a whole product innovation side on the user experience and relating to the customer. We talked about relationships and building that as the basis of a brand or loyalty. When you look at innovation in fintech or technology in general, because as you mentioned, it's tech, really, do you look at more the technological deep tech side? Do you see much innovation happening in that space as well? Or are you looking at, what is the more common thing and what is the more lacking thing, in your perspective? So maybe we can start over here.
Maybe a quick one. What we try to look at is technology has more defensibility, and it makes more importance in fintech because it's a very crowded space. So if we can see some kind of a deep tech layer that can really make you stand out and defend from people who will be copying you as soon as you start becoming copyable, if I may use it, that's what we look at. Yeah.
Okay. Yeah, in fintech that's not that easy, but for me there's not really the deep tech fintech. It's deep tech, it's technology at all, and you have to think about how can you use that within the financial community. We are ourselves changing a little bit the model of investing in startups. We're looking more for sustainability. We're getting off the classical VC model. I started it almost 30 years ago now, putting more the angel view of investment to VC. We're not trying to find the new unicorns, collecting many startups, filling them up and shooting them into the sky to hope there's the one that will return the money. We're more about sustainability, trying to get many startups in the black, maybe with lower rates, but still good growth rates because it's a small business. but going with them for a long time, not the classical closed VC funding business, like going with a fund 10 years and then the investors want their money back. We're trying to build an ongoing fund, which allows to go more into deep tech, to have a longer view of the investment, which in longer terms is also giving you more back as an investor. So, and I see a lot of the VC scene is changing because they're realizing a lot of the models, especially US models, with fueling up and shooting them to the sky, is not working. They're not making money with that model. So we're trying to find a new way in investing, and this allows to go a longer journey, a better journey, a sustainable journey, and I think there will be a lot of changes in the future.
That's coming back to my first point, why fintech is so hard space to actually invest or raise money. It's obviously, we are generalist fund, so we invest not only in fintech, but we always looking for this true technological innovation in the product, because this is what will sell your product. That's like, we're looking for the cases where this technological innovation is translated to better service, better, faster, cheaper, and creates long-term competitive advantage. So if anyone tries to copy you in Silicon Valley and has deep pockets, they can't do it faster than you are running away, right? Because you have edge on the tech. So, and that's why the majority of stuff we see in fintech is, it's like me too, or just combining whatever is there. So that's why fintech is very hard to find those kind of diamonds.
As they say, putting screens on databases is not an innovative company make, right? So, last point, I mean, is there anything that you would, as we wrap up now, is there anything else that you feel related to the fintech space or as an investor that you would like to share with the companies here? You know, kind of a quick summary or conclusion of what are the key takeaways that you'd like to leave them with? So if they came to you to share an opportunity, you know, they can self-qualify potentially and make life easier for themselves and then for you as well as investors. So I'll start over here.
Maybe just a few points like find a reason, true reason why you are in this space, why you are doing fintech, and is that really sustainable reason? If you succeed, will it get really, really big? And then do you have the defensibility to do that? And then find out people who are better than you, with whom you can work, and that goes across the board. Your team, your mentors, your wider team, as well as your investors at every stage of time. And then look at the world as flat. In that, do not just stay in your national boundaries or your regional boundaries. And finally, see the regulator is the big elephant in the room. How do you make sure that you are actually not putting the wrong foot by the regulator or the regulatory costs? And finally, build in cybersecurity into your product. That's going to upset every one of us in 5 years' time from here.
All right. I don't want to repeat. I agree with my colleagues in terms of these elements. I just want to add that don't fall in love with the solution that you have. Fall in love with the problem. You need to solve the problem. And how long is this problem that you're solving? What is the sustainability? Do we have mission-driven business models within fintech or technology-oriented towards financials? And also, when you're looking into your business model, you have to look at the innovation of the business model that you're looking at. We worked on what we call the three-dimensional business model, which is the technology-driven, which at the end you're getting intellectual capital out of this. Market-driven, also exit-driven. If you have to go with the traditional VC, you must have an exit-driven business model. Today, we're also having new markets that actually people don't talk about. It's the big elephant in the room. It's basically big corporations, they're growing, they're expanding by acquisition. They're acquiring smaller companies. A lot of these companies that we see on board, all they're doing is like, me, buy me, right? I mean, that's what they're doing. They're coming up in order to be, so a lot of these companies, in fact, what I've seen from my research is the fact that a lot of these companies are actually designing their company as a product for sale in the M&A market, having multiple buyer opportunities in the future. This is called exit-driven business model. It is actually a business model by itself, which is very interesting. And the way they're using the business model of exit-driven business model to position themselves in the markets of M&A to be bought by corporations. This is something, if you're going to go on the VC thing, this is a must. There's no other way, because VCs come in, they use other people's money, they have to exit, they have to sell you in multiples and multiples. Right? So I think that's one of the things that I suggest, that don't hide this. You have to think about it, how to position yourself in the marketplace, in the M&A marketplace.
Okay, for a takeaway, you will have customers in the future for your solution, but think about, you'll also have customers as investors. So don't go out there and wave, I need money. As I mentioned before, it's not about the money. If you want to address an investor, if you want to address me, you have to build a relationship and you have to look, and that's what you said, I totally agree. Choose somebody who can give you more than the money, who can give you a valuable network, who will give you valuable insights in the market you want to work in. Get the people, don't get the money. The money will follow additionally. It's smart money, and that's what you need if you want to be successful.
Well, Summer, what I would like to see, I'm looking for this wow effect, right? Right now, listening to the vision, I'm like, oh, that's clever. Like, and so, like, you take some global experience that truly sucked, and then you bring something interesting angle, tech, and you make it delightful. Or when you listen to it, you understand that compared to this, current experience sucks, right? If you could do that, why we are still doing it? So that's, and obviously I'm looking for passion in the eyes of the founders, that they're really obsessed with this and they just want to make it happen.
So basically, be a founder who actually believes in the problem and wants to solve it and has some real, teach me something new, for example, and build relationships, have some sustainability in mind, and really think about, you know, like making sure that you can build that product innovation and trust with security and everything involved. Thank you all very much for those insights. Hopefully everybody got a lot out of this, and yeah, let's give the panel a round of applause.
Thank you so much.